Welcome back. You're watching Stockwatch with me, Julieta Televi, and join me to take your stock-related questions this evening are David Shapiro from Sasfin Securities and Wayne McCurrie from F&B Wealth and Investments. If you'd like to send questions, please email stockwatch@bdtv.co.za or via SMS on 41392. David, Wayne, good evening to you both. Wayne, I shall start with you tonight. Not a bad day on the JSE today, bit of a resurgence in the platinum stock. So I'm sure for those who have been wearily holding on, they were quite happy about that. But iron ore shares like Kumba had a terrible day. So quite a big divergence in some of the mining stocks.
Yeah, the Kumba's had a good couple of bad days, but I've been talking about the platinum shares. It feels like December again. You know, Amplats is almost $800. In December, I know it got really close to 1,000. But I think this is all to do with an interpretation of the US inflation number last night. You know, when it initially came out yesterday, our market was up quite nicely, and then it gave it all back, and the mining shares came under pressure. But then, when you look in the detail of the inflation numbers, there's two very important things, I think. First of all, food inflation at 2.2%. I mean, this is like a 3-year low. It's actually very, very low. And then 60% of the month-on-month increase is essentially your mortgage bond and how it's gone up by. It's called rental. But rental's all based essentially, as I said, on the mortgage bond. And a year ago, the US 10-year yield was, I think, 3.4 and is measuring against 4.2. But I think in 4 or 5 months' time, that treasury yield goes to 4.2. So your month-on-month increase will be null. So in other words, there's a lot of inflation is coming out. And I think the market digested this. And we saw the results on the US markets last night. They were all quite good. And today the Rand's going strong, and mining shares other than Kumba are actually doing incredibly well.
Kumba's ex-dividend.
Oh, okay. I was wondering what's going on because, you know, there had been falls in the iron ore price. Okay, all right. That would
it was down slightly, but it was down 7.8%, but I think about 6 of that percent, or even 6.5%, was the dividend. So yeah, I think there was. I'm trying to think which others. Nepi was also ex-div. I don't know what else was ex-div, but Kumba, yeah. But hold on a sec. The iron ore price is coming down.
Yeah.
You know, the iron price is heading towards 100. So there is reason for it to be a little weak as well. But today was specifically the dividend.
And David, going back to Wayne's comments about if you dig into the detail on the US inflation figures, does it support ebullience in the market?
Yes. Yeah. The trend's going down. And, you know, we're nitpicking over stuff that most people don't even know or doesn't really affect them. So it's, you know, it's more or less a gauge. But I think overall, the belief is that the trend is going to continue down. And Wayne's right. You know, eventually these things begin to neutralize itself and goes kind of flat. So you know, also I think there's a need to start pumping up the economy. I say the same thing here. Because if you look at the food inflation in South Africa, if you look at the wheat price, I mean, it's up incredibly high. And the people who are hanging on, you know, paying mortgages and paying and then motor cars, and then most of their basket is food. I think somewhere along the line, you need a bit of relief. But I think we're all kind of plush carpet economists, you know, who sit there and look at spreadsheets and don't really care about the people down at the street, you know, on street level.
Well, I was going to say Donald Trump cares about them. He was blathering on something about inflation being at 50%. He was quoted by Edward Luce in a Financial Times article, and it is incomprehensible. So anyway, but just actually, you talk about the wheat price in South Africa. We are in the grip of an astounding heat wave, and it looks as if the crops have been absolutely ravaged in the Free States. Is this something that we should all be paying a little bit more attention to?
Yes, I think the prices it's the maize price particularly has gone up dramatically. So we have to, you have to be aware of this. I know that there's been quite a bit of rain and so on, but I mean, they're being frazzled. So it is going to impact I'm sure I'm sure one can import it if your crop's lower, but that does affect balance of payments. It does affect the
pricing, yeah.
But yeah.
Wayne, I know that you're not a fan of sort of primary commodity or primary producer companies, such as Astral Foods, for example. But if you were, would you be quite cautious on all of these, given what's happened to our weather in the last 6 weeks?
Yeah, look, the food companies themselves, the producers might not be that badly affected because they can, to a certain extent, pass it on. But it's not good news for anyone in that chain at all.
Yeah.
Yeah. Okay. Then just talking about Impala Platinum, a viewer says, is this the right time to buy Implats, given that they're up now 23.8% over 5 days? Wayne, do you think this is the turn for these PGM shares?
Well, look, I mean, I thought they were great buys, a good couple of months ago, but and they've gone down and they've gone up and they've gone down and they may be going up a little bit now. I would still prefer. I know that obviously Impala is more geared to the upside, but I would still prefer to go for Anglo Plats. Impala's got that accident they had, and you never know what's going to come out from those findings and who's guilty and not guilty and what fines they may have to pay. And so I would rather go for Anglo Plats. I mean, Anglo Plats has got the premier mine in the world, platinum mine in the world. So I'd rather go for that one. But yeah, if you're bullish on commodities and you think the cycle is turning, you'll make more money out of Implats than you will out of Anglo Plats.
David, are you venturing anywhere near these?
It's too hard to call. We don't know what lies ahead. I think the whole demand side is so difficult to get a grip of and grasp of. Most of the sales go to auto manufacturers for catalysts and that. And I'm not sure whether that's increasing or not. There's a lot of industrial uses as well, but it's very difficult to understand whether this is going to pick up or not. So I just remain circumspect at the moment. Even the producers are, and I think all they're concerned about is, okay, let's just right size our mines and mine accordingly. But it's very hard to say whether this is the right time. I mean, it's had a massive fall, and as Wayne will tell you, with commodities, after these falls somewhere along the line, when everybody's ignoring it, that's when the turn comes. But you'll get plenty of signals. You don't have to find the bottom. You know what I mean? You don't have to be the person that finds the bottom.
Yeah. Okay.
Let somebody else get punished. Yeah.
Yeah. Okay. Then there's a fairly technical question here, and the viewer asks, why is there a difference between JSE listed stocks and ADRs listed on the New York Stock Exchange? For example, Sasol trading on the JSE at 142 Rand and 11 cents, and an ADR trading at $7.80 times 18.6318 equals $145 Rand and 32 cents. Other stocks like AngloGold, the difference between JSE's listed shares and ADRs are slightly narrower. I mean, I don't know if the question is there always an arbitrage opportunity between ADRs and JSE listed shares?
They're not fungible. In other words, you can't buy the one and sell the other. You might be able to, but you're talking about very small values. There might be some costs involved in buying ADRs. It's just a convenience. It's a convenience for American buyers of Sasol that they can buy it from an American seller, and it's traded. It's normally banks that stand behind it, and that you don't have to come to the JSE to buy it. So, I mean, there are many, many ADRs in many different businesses. If you go into the US markets, you'll find an ADR for 10 cents and for Novo Nordisk and for hundreds of stock. It just makes it easier for buyers there. Yeah. But and you will find what I'm trying to get at is that even in that case, you do find a slight difference between the American ADR and, say, the Swiss ADR or the Danish ADR. The Danish primary listing or the European primary listing. There are differences, which is just probably liquidity and it takes time to catch up. But the trends will be the same. You're not going to find one going up and the other going down.
Okay. All right. So in other words, don't really actually pay much a difference to any sort of slight price differentials.
No.
Okay.
No.
And then Wayne, I suppose I'm going to ask you first. Will WeBuyCars be a buy once listed on the JSE? They don't have any import issues. Something like a chip or a part shortage also wouldn't affect them. So surely they will keep performing.
Look, it's a very good operator in a consolidating market. I mean, I can remember, not even 5 years ago, you either traded your car in or you put an ad on some online platform and got shady characters coming to your house to try and buy your car. There's none of that exists anymore. I mean, obviously tradings exist, but private selling of cars virtually doesn't exist. It's WeBuyCars and Wheelie and all the other players in that market. You actually dominate the used car buying and selling market now. So I think it's a very good business. And obviously then lower interest rates over the next 2 to 3 years will greatly benefit. But there are risks in the used car market. I mean, sometimes you can't understand what the risks are because something just crops up and the prices go down and then the margin goes up and then the margin goes down. But these are certainly WeBuyCars is certainly the biggest player in that market. And I would consider it, yes. There are other players, and you can go for Motors, and there are a couple of other players, but I certainly would consider buying it.
I suppose the difference, I mean, you talk about 5 years ago, you didn't really have something like Wheelie. They're quite cheeky. They opened a huge mega store right next to WeBuyCars mega store. And I think, is Wheelie owned by Motors? So
I don't know who owns Wheelie, I'll be honest.
David,
I don't actually know.
Okay. David, do you think?
I'm always concerned about companies like that. I'm concerned, because as I've said before, all your profits are in the cars on the floor. That's where your money is, and you've got to keep turning them over in order to create. And I have only heard good reports about the quality of service from WeBuyCars. They're not honest Joes in Jewel Street anymore, or those chaps with the moustache and the pinstripe suits and fancy ties. It's not at all. I think they're very, very professional, and I think they've got a very good feel. But my concern is, I mean, when you drive past the Wheelie warehouse or you drive past the Dome and you just see thousands of cars, so you say, hold on a sec, they've got to sell them. They've got to keep turning them over. And it is, we don't call it, we call it what's previously owned, which is a nice way of saying a second-hand car. Someone's owned it before. So I think it's a difficult business. I think generally it's, but I can't fault them for the quality of, the service they give.
Yeah. I suppose it's a follow-up question. A viewer asks, will transaction capital shareholders get allocated any WeBuyCars shares? And if so, how many?
I don't think there's any allocation. Transaction capital is keeping a shareholding, but I think it's open for subscription. There's no allocation to current transaction capital shareholders. I don't know, I might be wrong, but I certainly haven't heard anything about that.
Okay.
Yeah, I think Wayne's right. I mean, it's a raising capital, but I also have to go through the prospectus.
Okay.
I haven't had the appetite to go through those things at the moment. I think going through Old Mutual's numbers and some of those numbers just puts me off.
Actually, can I just ask you about that? Yes. Oh gosh. Just on Old Mutual and Sanlam, and today you had Momentum Metropolitan coming out with trading updates. They've all been really good, and both of you two have been naysaying these insurance companies, saying it's such a hard market, etc. And yet they've actually produced decent results. I mean, have they been surprising to you, the strength of the results coming out from the insurance companies?
Well, look, Moment's my share pick, so I can talk about that later.
Okay. David?
But I think, the market's doing a lot better. So that obviously helps their portfolios, helps the portfolios that they run, and it allows them to take more profit, to increase their fees. But I think what concerns me is not really the performance of their existing portfolios, and this is what I can't gather is selling new policies. At a time where the consumer is under enormous pressure especially if you're down and knocking on doors trying to sell insurance cover, or you're trying to sell funeral policies. I suppose everybody goes for those things. That's where I'm concerned about whether or not they really, selling a lot more and expanding their business. Have you bought an insurance company policy? You haven't. No. Have you bought an insurance product? No, you haven't. So they've got to go around and do those kind of things. And that's what concerns me. These are good, in a solid, strong, growing economy, people are getting more money, then they go out and do it. But we haven't had that for a long time.
Okay.
Yeah, look, we've been discussing the life insurers, as you correctly said, and always said that, they look cheap enough, eh? But the earnings from Old Mutual and Metropolitan, Momentum Metropolitan, have surprised.
Yeah.
And a lot of that stems from they're keeping shareholders' funds, a lot of it in cash. And of course, interest rates have gone through the roof. So they earn a lot of money on that as well.
Okay, a viewer has sent us...
Juliana, that's the point. I'm trying to establish, and that's why I can't read those results. You're trying to establish, are they really expanding their business dramatically? Sanlam, sure, they want to go into Africa with Allianz and sell millions of policies of insurance. Yeah, that's an expansionary move. But what's happening in South Africa, I don't know. Listen, we also came out of COVID, so people are not claiming. Claims have gone down as well.
Yeah.
So a lot of technical factors and markets have been in their favor. And Wayne's right. You'll see it in things like Santa. We're making a lot of money because interest rates are high on the money that they have and claims are low.
Yeah.
So, you've got a lot of cash on which you're making it.
Okay. I'm going to move on, and it's a question that a viewer sent us, and he really wants us. He sent me 2 messages. It's just a little bit complicated, and so bear with me. He says, I have the following in my tax-free savings or investment accounts. Are there any you guys could recommend, knowing that I've given up on South African indexes almost entirely? The biggest to the smallest, and there is quite a list. So Satrix WDM, I'm not ETF, SP5IT, Signia 4IR, Satrix NDQ, I guess that's NASDAQ, CSP 500, I guess that's an S&P 500, Satrix Indy, Satrix Pro, Satrix Resi, Satrix Fini, Satrix China, SIG Prop 49, and SIG US. Is there anything that is glaringly missing from that list?
There are a lot of choices now. And you can get into the S&P 500 or you can get into the MSCI US, so you can get funds that track the US markets, that track the NASDAQ. The 4IR is the fourth industrial revolution, which is a Signia product and that, which is very, it's high-tech companies or very high growth companies. There's a health business which gives you exposure to both Novo Nordisk and SY, I can't remember, but it's a health one, Global Health, SYGH, I think, which gives you Novo Nordisk and Eli Lilly, or a good percentage of them. So if you dig, you can get very good exposure to the global markets through them. But understand the ones that you're going into. I prefer the offshore ones and have done exceptionally well through them. But there is a good offering.
Wayne, are there any ETFs that you think are fantastic to hold?
Well, I think the glaring thing there is exactly what the viewer said, is they got no South African one.
Yeah, well, they've got the Resi and the Fini.
Yeah.
And that's been the right decision, obviously, but it might not be the right decision for the next 2 or 3 years. So you don't have to buy a South African one, but why not buy some resource, get some mining resource exposure.
Okay, they do actually seem to have Satrix Resi. If you had Satrix Resi and Satrix Fini, would you leave it at that?
Yeah. But, the mere fact that there's so many also tells you a story. These are all essentially index trackers. Maybe you should consider cutting back a little bit, or at least also, as David said, understand very carefully what's in these things, because we've seen a good few of these blow out, that they follow a trend, they follow a style, they follow a fashion, and all of a sudden that's not fashionable anymore, very much like the battery ingredients ETFs that you could track all of these things. That hasn't worked so well.
Yeah, the lithium ETFs.
Yeah.
Took punishment there.
Yes. Oh, well, maybe it'll come back. Then the question on Sasol, is it a buy at this level on a PE ratio of 3.4 and a dividend yield of 8%? Wayne?
Man, this is a difficult one. On a 3 to 5 year view, yes. But in the shorter term, I mean, this is a commodity share like any other commodity share. In the shorter term, well, I mean, this thing has taken a total and utter beating. Don't worry too much about that PE ratio because the E there can disappear and go up. But I suppose it is a buy. You know, you could Sasol with half decent market conditions and especially chemical prices, you know, they can make 40 Rand a share in a year profit. And you can put that on a 5 PE, you know, it's still worth quite a bit more than the current share price. So I suppose it is a buy, but you may get some short-term volatility. On a 3 to 5 year basis, I think it definitively is a buy. But this is not a Shapiro chart, they say.
No, it is not.
It's not a Shapiro chart, this. It was a Shapiro chart for about 2 years when it went from 200 to 400, but then it turned into a non-Shapiro chart.
Yes. Well, maybe that is the time to buy. I don't know. I'm sorry to go back to WeBuyCars, but there's another question that's come through, and it says, do the wise men think Transaction Capital is listing WeBuyCars in order to raise capital and expand the business, or just for the main guys to cash in their chips?
I don't know, but it is definitively a scheme. Number one, they will raise some cash, obviously, but it's a definitive scheme to give current shareholders more value. Definitively. So they want that share price of the combined unit to go up. And that's exactly what has happened. So whether that's for the shareholders to cash in or just for the management to cash in, I think it's for all shareholders. But obviously management are big shareholders.
Yeah. Okay.
They must be selling shares. They must be selling some of their shareholding and retaining some. That makes sense, you know, for them to have cashed in and just give them a little more liquidity.
A little bit of a side comment. We must never forget, we always read about how rich people are and how many shares they own. You don't know what their liabilities are.
Yeah.
No, I'm not talking transaction capital here. I'm talking in general. Yeah, oh, this guy's a multi-billionaire. He's worth so much because he owns so many shares in this company. You don't know what liability sits behind those shares because that's not disclosed.
Yeah, including your tax bill. All right, well, I'm getting to your stock pick. So, David, I shall go for yours first.
Oracle's results came out yesterday. They were superb. And why I like Oracle is it's been like a forgotten artificial intelligence play. You know, I mean, it's a massive software company. And I think what impressed me is their guidance, you know, what they see out there in expanding their whole cloud services. And I say it because we've ignored this company. You know, it's done well, but it's never amongst our Magnificent Seven and so on. So have a look at those numbers. I think where they're projecting, you know, where their projections are very encouraging for the next couple of years. And this is not a small business. It's a highly rated business as well.
Okay.
Don't like Larry Ellison, but anyway, that's just personal.
Yeah, there are more than a few very unlikable executives at the top of the pile in the big tech universe. Wayne, you said Momentum Metropolitan is your pick. Is it simply on the basis of the trading update?
Yeah, look, obviously today's trading update was very good, but, you know, the valuation is just quite compelling. I know the share price has gone up a bit recently, so, you know, it certainly hasn't been a bad share price. But 6% dividend yield is still very attractive. And if your earnings are going 50%, that's an historic dividend yield. You know, the dividends are going to go up as well very nicely. So I just go for this on a valuation basis. You know, obviously, that's undergone management changes over the last couple of years, but that all seems to be for the good.
Okay. Thank you, David and Wayne, and thanks for answering the question for the viewer about his ETFs. He says, sends us another message. And thanks for watching the show. David Shapiro is from Sasfin Securities. Wayne McCurrie is from FNB Wealth and Investments. And up next, the close. Stay with us.